Hi guys, and welcome to another week ahead video. Now this week we think the Australian dollar can offer us some great trading opportunities, so stay tuned to this video to find out why. And on a very quick side note, if you find this content, weekly content, helpful, please click the link or the share or the subscribe button, as it really helps YouTube to suggest more of our content. Okay guys, so looking at our three-step analysis process. First step, finding the baseline for the currency. In this case, it's the Australian dollar. Second step is finding the baseline for the risk event, which is the Australian jobs report coming out on Thursday. And then step 3, looking at possible sentiment shifts that can create a catalyst or a trigger for us to trade the Australian dollar with this week. Now, our current bias for the Australian dollar has shifted to weak bullish. In terms of monetary policy, we saw the RBA cut the interest rates by another 25 basis points at the October meeting and signaled that it's reasonable to expect an extended period of low interest rates. Now, they also reiterated that they have room to ease further if the need arises, and the market saw a little bit of a positive uptick when Governor Lowe said that they, from the RBA, think that the Australian economy has reached a positive turning point. Now, as a high beta currency, the AUD is very sensitive to risk sentiment in the market. This was again very evident last week when the Aussie yen pair climbed over 200 pips on the positive risk tone coming from the US-China trade negotiations. Now, during these trade talks, the two sides did announce a phase 1 trade deal, which basically includes the suspension of US raising tariffs on 250 billion worth of Chinese goods to 30%, and also includes an agreement from the Chinese side to purchase 50 billion worth of US agricultural products. Now, at the moment, the risk profile for the AUD means that the market is more focused on trade rather than monetary policy, which should keep the Australian dollar relatively supported if we see that same positive tone from the trade agreement from last week play out this week as well. Now, in terms of the baseline for this week's upcoming risk events, this week we might have an opportunity to trade Aussie jobs report due out on Thursday. Now, we know that the RBA has raised concerns a couple of times in their previous meetings about the unemployment rate ticking up, and the markets will be very interested to see whether this week's numbers adds or diminishes rate cut expectations for the RBA going into the rest of 2019. Now, current expectations for this week's Aussie jobs report for the headline employment number, that is expected to come in at 15,000 from a prior of 34.7, with a minimum expectation of 5 and a maximum expectation of 20. Now, the unemployment rate is expected unchanged at 5.3%, with a minimum expectation of 5.2 and a maximum expectation of 5.3. Now, what is very, very important, that is always important with regards to the employment report, guys, is to always consider the full-time numbers just as important as the headline number itself. We saw full-time employment coming in at at a contraction of negative 15.5 thousand in August. Now, if we have something like a beat in the headline number but a miss in the full-time number, that will be considered as a rather mixed report. So if we're either looking for a big beat or looking for a big miss, we want that headline as well as the full-time number to say the exact same thing to provide us with a higher conviction trade opportunity. Now, we know currently that the RBA is targeting an unemployment rate of 4.5%. So at this current levels, some analysts think that the RBA is still on track for another rate cut in 2019. So the unemployment rate will be very important at this meeting. Now, it's important again to stress here that even though this employment report will be important, the market's main attention for the Aussie dollar should remain on market sentiment given last week's trade negotiations. Now, looking at possible sentiment shifts that can create a trading opportunity for us, if we look at possible dovish sentiment shifts, a dovish shift can occur from a very big miss in both the headline and full-time employment numbers, as well as an uptick in the unemployment rate. To make a meaningful impact, the actual numbers would need to miss the market's negative expectations, as well as increase the probability of future hikes needed by the RBA in 2019 and 2020. So this means we would need to see a contraction in both the headline employment as well as the full-time employment numbers, as well as an uptick in the unemployment rate to higher than 5.3%, which it is at currently. Now, another big shift can come from any negative developments in the US-China trade negotiations. If some of them come back this week and they talk back the negotiations or talk back the positivity, that'll obviously cause a negative shift or a dovish shift in the Australian dollar. Then looking at possible hawkish sentiment shifts, a hawkish shift can occur from a very big beat in both the headline and full-time employment numbers and accompanied by a reduction in the unemployment rate to below 5.2%, which is the market's minimum expectation. Now that should dampen the market's expectations for a November rate cut from the RBA, which is currently sitting at 46% probability. Now another big shift can come from further progress in the US-China trade talks. Keep in mind, though, that given the positive risk tone coming into the week and the end of last week, the risk tone seen in the markets plays a major role in the Aussie dollar this week. So a bigger move might come from a positive beat if the data supports that, but you do need to stay on top of any changes in the risk tone if you are planning to trade the Aussie dollar this week. Now, possible currency pairs to consider for trading the Australian dollar this week. In case of a dovish shift in the Australian dollar this week, we can look to pair the Aussie dollar against something like the Canadian dollar, which has a weak bullish bias following last week's stellar Canadian jobs report. Now, the good news about pairing the AUD with something like the CAD is that both currencies are considered high beta and have correlation to risk sentiment. So any big moves in risk sentiment, whether up or down, should be seen in both of these two currencies. However, if we do see a very negative risk off tone in the markets, then pairing the Australian dollar with something like the yen might be a better option, as that will further pressure the Australian dollar and support the yen. Now, in case of a hawkish sentiment shift in the Australian dollar this week, we can look to pair the Aussie dollar against the euro, which remains fundamentally bearish. However, again, risk sentiment will be very important. If the current risk on tone persists, then pairing the Aussie dollar with the yen could be a better option, as well, as that will support the Australian dollar and then pressure the safe havens like the yen. Now, how can we actually trade this event? This event will be valid for trading phase 1 trades if we get a clear sentiment shift. Now, if you're interested to learn more about how these phase 1 trades work, you can check out our news trading strategy playlist on our YouTube channel, where we post weekly examples of how these types of trades play out. Now, if we do get a phase 1 sentiment shift generated by a dovish or a hawkish shift, then we can also look for a phase 2 pullback of that initial move. Now, we post updates on all of these types of new moves and potential moves inside our tradable sentiment shift reports inside the Forex Source terminal under the Market Insights tab. Now, you can see each day which sentiment shifts are in play and which ones are still valid for trading the phase 2 pullbacks as well. Now, you can learn all about how these setups work during our live analysis webinars that we hold each day inside the Forex Source terminal. Guys, thanks for watching, and as always, please never hesitate to add some comments at the bottom, ask us questions, anything that you want to know about the fundamentals. We are making a bunch of awesome videos for you guys based on the questions that you sent in, so please keep them coming. Until the next video, cheers.